please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Hi guys, welcome back to Bazaar Morning Call. The markets are definitely tense because of the airstrikes in Syria. So you can see it on most of the screens. The SGX Nifty is under pressure. Markets like Hong Kong are also down. But let's find out. Our markets have been in the green for what, 7 days now? Let's see what are the stocks that you need to look forward to as we head into trade this morning. Infosys is top of mind. Rima joins in to tell us more about that. Rima, I think the margin guidance didn't go down too well with the street.
Yes, indeed. That was one of the key reasons for the disappointment in Infosys numbers. But just take a look at the ADR. It ended down with a cut of about 7.7%. A quick recap of the numbers. For Q4, the revenues were slightly lower than expectations, but margins were a beat. So the company delivered a constant currency revenue growth of 0.6%. Expectations were for a 1% growth. Margins expanded to 24.7% versus expectations of no improvement. On their FY19 guidance, constant currency revenue growth at 6 to 8%. It's good. It implies an acceleration in growth in FY19 because the company delivered 5.8% in terms of growth in the prior year, but probably in the price because this was consensus expectation. As you rightly pointed out, their margin guidance has been cut for the second straight year. 2 years ago, it was 24 to 26%. Now it's brought down to 22 to 24%, and that is driving an EPS cut by most of the analysts. The sweetener for the shareholders is that the company will be returning an additional $2 billion in FY19. But given the stock run-up, rallied 4% last week, there could be some disappointment today.
Absolutely, Rima, thanks a lot for that. A 7.7% cut in the ADR would obviously mean a sell-on news is very, very likely today. Ekta just gave us some breaking news on Cipla. Can you repeat it, Ekta?
Yes, absolutely. Well, for Cipla, the stock is probably going to see a little bit of a fillip today because I understand that their Indore facility got inspected by the US FDA, has been completed in terms of a routine inspection which began on the 2nd of April. So it was quite a long inspection. So there was obviously some amount of trepidation on account of it. But the company has confirmed that there is no adverse observations, there's no data integrity and no repeat observations which have come out from this particular inspection, and hence maybe there could be a little bit of green on the stock.
Okay, a little bit of green. We would all like that, right? Let's move on. IDBI Bank is something to watch for this morning. Lata, why is that?
See, it's a Times of India report, and this is something doing the work, doing the rounds for the longest time, that government may reopen the IDBI restructuring plan, including sale of the government stake. In reality, I doubt anything will happen. I mean, they have their hands full with Air India. It's not easy to sell IDBI. The bad loans, because of the recent RBI circular, is going to rise over 30%, and that's not easy. You know, IDBI doesn't even have a very favorable branch to NPA ratio. Now, a bank like UCO has terrible asset quality, but it has many more branches than IDBI. At least there's some attraction. It's not very easy to do this, and that too when you're running into a pole in 11 months' time. But still, the buzz is important. It has been around, and therefore today the stock could be in the green entirely on speculation.
Okay, well, we'll keep an eye out on that. It hasn't done well for investors at all. The last few months, it's eroded quite a bit of wealth. But Lata, because of the way crude has been moving and the way the rupee has been moving, a lot of stocks and sectors will be in focus today. Yeah,
I mean, very generally, it'll be obvious to anyone. Rupee is going to have a bit of a tough time because of the rise in crude prices and the very poor export numbers, very high trade deficit numbers. A weak rupee is obviously very good for IT stocks. So the infy bad news will not spread to the rest of the sector because rupee could be a tailwind, and crude, of course, could continue to pummel oil marketing company stocks like HP, BP, IOC. They could be in the red again.
Okay, but some good news, actually good numbers coming in from some of the financial companies. So Abhishek is here to tell us more. Abhishek, Group Finance was not bad. Tell us about the others as well.
Well, DCB to begin with, Sonia, strong set of numbers coming in. The loan growth at 29%. It has come on a healthy basis. Why? Because slippages have declined on a sequential basis. Asset quality has also improved by 10 basis points. Therefore, gross NPA has come in at 1.79 versus 1.89. However, the niggling worry is the NII growth. growth. Now, the NII growth has come in at 20% YOY versus loan growth of 29%. So there is pressure on the yield front. However, I expect the stock to be in green today. In group finance, strong disbursements, sequentially and YOY, the disbursement grew by almost 20%. That led to AUM growth of 17.5%. Asset quality also improved. Gross NPA at 0.45 versus 0.73 sequentially. They have also made an announcement of bonus shares 1:1 ratio. ICICI Securities, the YOY performance was strong. However, quarter-on-quarter performance was dismal. So broking revenues grew by 32% YOY, but they were just at 0.6% sequentially. Therefore, PAT growth was just 1.6% sequentially, while YOY it was 86.5%. Back to you.
Okay, thank you very much for all those numbers. Ekta, why Fortis again?
Well, that's because now IHH has also confirmed what Nisha had reported, that they have made an unsolicited bid for Fortis. This is up to 160 rupees per share. But again, it is a completely non-binding expression of interest where the company, where IHH has strategically and mentioned clearly that this has no legal binding. They're going to be doing due diligence, and obviously the due diligence will result in what their final decision would be. But at the same time, they have the ability to pursue shareholders as well as probably revise their bid if needed based on the kind of competitive scenario we're seeing.
Okay, well, the most attractive bride, right? So many suitors, Fortis Healthcare. But thanks, Ekta, for that. Moving on, Reliance Industries has issued a statement saying that the resolution plan for Alok Industries submitted in conjunction with JM Financial did not meet the approval of the Committee of Creditors. Ritu Singh is here to give us all the details on that. Ritu? Over to you.
That's right. A joint consortium plan submitted by JM Financial ARC as well as Reliance Industries failed to gather the requisite votes from the Committee of Creditors yet again, as it submitted its revised offer of 5,050 crore rupees to take over Alok Industries. But even this could not get the 75% vote and therefore was rejected. Remember, the 270-day deadline for the company under Insolvency and Bankruptcy Code ended on Saturday. So the company is now headed into liquidation as the plan was not approved. The liquidation value of Alok Industries itself is about 4,200 crore rupees, and the claims of the creditors are about 29,400 crore rupees. So there's a good 25,000 crore hit that banks will have to take on account of this. And with this is the first company in the first 12 large defaulters identified by the Reserve Bank of India that is headed into liquidation.
All right, thank you very much, Ritu. Largely in the news, so shouldn't expect any of the stocks to move. It was well known that the Reliance JM Financial bid has been rejected. Even if it were taken, it's going to be a big hit for the banks. Sonal, you have other stocks in news on your list.
Well, I'll start with some results over the weekend that we got. BPL, good set of numbers, strong revenue growth of around 57%. Even EBITDA came in higher by 96%. Although other expenses doubled to 34 crores, mainly because of a forex loss of 7 crores on account of fluctuations in Q4, and also because they saw a debtor write-off around 8.5 crores. However, I expect the stock to be in green considering the strong results. Rani Breaks revenue was up around 12%, but the EBITDA came down by 27%, and the operating profit margin came down by 610 basis points. Profits were up 37%, but that was mainly largely due to the higher other income that doubled to around 3 crores. Other stocks that are in focus are Marico, because the company has decided to do a strategic investment in Revolutionary Fitness Private Limited by acquiring 22.5% stake. Jain Irrigation Systems will also be in focus because they have a board meet on April 18th to consider various options to raise long-term funds. So all these stocks will be in focus today.
Okay, thanks a lot for that. After the monsoon forecast as well today at 3:30, you could have a lot of these stocks back in focus, and names like Jain Irrigation that Sonal just suggested. But Anisha, tell us about some order wins that you're tracking.
Well, yes, Sonia, I'll start with IOC that has signed a definitive tolling agreement with Dhamra Port for 3 million ton of capacity on an annual basis for regasification. Now, while this takes care of the captive need of IOC for the city gas distribution and refineries, it's a better news for Adani Ports because now they get this steady cash flow as far as the booking their 3 million ton of capacity. Moving on to ILFS Engineering, there they have backed orders worth around 130 crores for pipeline laying work, and that order has been won from GAIL. Now, incidentally, GAIL has placed orders worth around 780 crores. That makes them closer to meeting the first phase of Pradhan Mantri Urja Ganga They're likely, in fact, to complete before the target of December 2018 itself, so good news coming in there. Simplex Infrastructure, wherein the board of directors has approved issue of equity warrants to promoters worth 200 crores. Remember, the company's total market cap is sub 3,000 odd crores, so might remain important and in focus today. Lastly, on Vikas WSP, well, one of their products has been approved by MNC, and that means that they're expecting orders worth around 162 crores in the coming 12 months. Remember, their total market cap is sub 300 odd crores, so this might be in focus as well.
Okay, thank you very much for that. Anisha, you want to recap the stocks?
Yes, in fact, a long list of stocks to look at this morning, right? Stocks expected to gain today. IDBI Bank, HCL Tech, TCS, Wipro, Fortis Health, DCB Bank, Crew Finance, good numbers there. Mansali Engineering, Marico, Jain Irrigation, IOC, GAIL, ILNFS Engineering, Simplex Infra and Cipla. While stocks expected to be under pressure today, Infosys posts its numbers, HPCL, BPCL, ICICI Securities, Alok Industries and Rani Brakes. But the other topic of discussion is the trade deficit.
Yeah, I mean, it was worrisome that it's going towards 14 billion trade deficit a month as well. Exports fell in March, aggregate 0.6%. Imports, of course, have risen 7.2%. That's not a very good sign. Let's get an expert to speak with us. Abhishek Upadhyay, the senior economist at ICICI Securities primary dealer, joins us on the phone line. Abhishek, how would you look at the March deficit numbers?
Hi, Lata. The number was definitely a little bit of a surprise. We had expected the number closer to 12.5. So this is higher. The caveat here is that the March numbers tend to be very volatile. So difficult to say that I can read a lot into it. But the theme this time appears to be a broad-based pickup in sequential pickup in imports. So which is a positive sign, of course, because it signals that the domestic economic recovery that we've been talking about, which is apparent in other indicators, is clearly apparent in the core imports as well. The worry, of course, is on the export side, as you mentioned. Even in exports, I think the key reason why we saw a larger deficit this time is because some of the commodity-linked exports seem to have done poorly. Right? So petroleum export pickup was rather sluggish, even as on the import side we saw a strong pickup. Right, so that aggravated the wider trade deficit. But what this number tells you is that we may have had a BOP deficit last quarter, and so the aggregate BOP surplus for FY18 could have been less than 30 billion rather than 30 to 33 billion as we had been expecting earlier.
So strong disbursement growth and a control over cost of funds and improvement in asset quality in Gruh Finance. I'm actually firing on every cylinder. Sudhin Choksi, Managing Director, Gruh Finance, joins us on the phone line. Mr. Choksi, we are now running out of adjectives. Every parameter looks good. Is this disbursement maintainable?
I think, there is going to be challenge on disbursement growth. Because if you look at it in the current year, the disbursements, though in our case, has shown a very robust growth of 27%. And which has been largely, driven by the demand under CLSS. Now, we will have to see going forward how much demand will continue under the CLSS, because still, in our opinion, in the segment where we operate, we have not seen, the supply still, coming at the same pace at what it should be coming.
Okay, so there could be some challenges as far as disbursements are concerned. Mr. Choksi, good morning. Can you tell us what the margins were in this quarter and what could a sustainable run rate in net interest margins be?
I think the net interest margin has seen a good growth of 24%, largely driven because of the disbursement growth. And I think going forward, we will expect that NIM will be maintained in excess of 4%. This year, our NIM has been one of the all-time high at 4.4%. But we will be able to sustain because interest rates have started going up, and there can be challenges on the cost of funds going forward.
Yeah, that's true. But people like you will be able to pass it on, I assume. But Mr. Choksi, I'm interested in what you're saying about ELSS scheme. You're seeing a supply shortage, and the scheme anyway runs out on in March 2019 because the government will. The government will go into election mode. So. Does ELSS not fire? What kind of disbursement can you guide?
See, but that is a very precise reason because, if I go by, even we have not yet received subsidy of the disbursement made under CLSS from the month of, I think, January onwards, we have not received the subsidy. And, the customers are getting impatient, because when they do not get a subsidy, I think, people's confidence, in the scheme will get lost. So unless and until subsidy keeps coming, at a pace which we used to earlier experience during the last year, I think, that was, truly driving enthusiasm both at our end as well as at the customer's end. But now when, you do not see the subsidy coming, at a normal pace, I think the enthusiasm will die down on both sides.
Oh, okay. Can you tell us how many units were financed under the PMAY scheme?
See, until now, from the inception of the scheme in 2015, we have financed around 18,500 odd families, under the CLSS scheme. Okay. The last year we saw CLSS scheme almost 100% growth. I think 800 crore disbursement went up to 1,600 crore during the year just ended. So we had a good, growth driven by CLSS. But I'm not sure whether the same pace may continue during the current year or not. Even in general, the other supply situation doesn't look, as encouraging as what we were anticipating. I thought during the current year, by the end of the, second half, we should see the supply situation improving. But I don't still see that sign improving in the second half.
Okay. Well, that's not looking very good, sir. Just your number, disbursement? 27 you did this time?
Yes, sir. Yes, I think we would be able to maintain, in the vicinity of anywhere between 20 to 25% disbursement growth.
Okay, that's not a small number anyway. Thank you very much, Mr. Choksi, for joining us with those details. So that's an excellent set of numbers that came in from Gruh Finance. Let's now get more fundamental analysis of all the stocks that are on our radar. Harendra Kumar, Head of Institutional Broking and Global Economy at Elara Capital, joins us now. Good morning, Harendra. Thanks much. Well, first up, what have you made of the finance numbers that have come in? We had DCB, we had Gruh, and of course we had ICICI Securities. Your take on the numbers so far?
See, fundamentally the sector is going through a flux, and all the three names that you mentioned are fundamentally different nature of businesses. So DCB is just coming out of the huge, capex over the last 2 years. ISEC, of course, is a clear good franchise, and grew actually where the numbers were very good. So I think structurally on terms of housing finance companies, I think the outlook is very strong. As Mr. Choksi indicated, 25% growth is no mean achievement. And our channel checks on the PMAY and credit linked equity scheme is very, very robust. So my guess is housing finance companies, despite the stress on spreads, will remain structural long stories. But overall on finance, I think we are very worried about the larger private sector banks because of the over-ownership of this sector. And clearly there are headwinds coming in. We did speak in the last interview on why the crowding in of so much of money into financial stocks is a risk to the sector per se. So my guess is that in terms of the overall private sector or some of the other financial sector, we are going to a prolonged underperformance on the financial side.
Okay. Harendra, hi, good morning. I also wanted your thoughts on how to approach Infosys now after the stock has sort of gained 25% in the last 6 months and the fact that margin guidance has been scaled down.
So clearly the value drivers are not working for Infosys. They will remain in restructuring for some period of time. So our rating is reduced. But overall on the space of Infosys, on the tech space, we're turning slightly positive. I think in our space, we like TCS. I think this series under ownership of the stock. And if the margins hold up and the margin profile or growth guidance is better, I think the stock will relatively outperform its peers within the space out there, because a lot of mutual funds are looking at the relative trades. Mid-cap tech looks interesting. I think this story has some time to run. So overall, yes, tech could be a relative outperformer to a lot of the other sectors. Within that, I think it's TCS which should be the one that one should opt for.
Actually, as you speak, Harendra, the SGX Nifty has taken a bit of a knock, down 0.7, and Hang Seng is now down 1.57. So clearly the Asian markets are taking perhaps the attack big. Not so much Nikkei. Nikkei actually is the outperformer today. But the other markets are clearly going from weakness to weakness. How are you looking at the markets generally? This level at 10,500, are you comfortable buying? Or do you think they could hit a roof here?
No, Lata, actually, if you put the framework in place, first and foremost is the equity markets are volatile, but some of the currency markets or fixed term are showing contradictory signals. They are quite stable, actually. It means that they are not reading too much into this overall, noise about trade wars, or for that matter, this attacks, or something beyond that. So S&P is holding up, Nasdaq is holding up. So my guess is that if the noise on these subsides, the markets have upside risks, actually. So I think they've held many decent support levels, and they would, as the volatility on the equity market subsides, the markets could tend up higher. My guess is over the next 3 to 4 months you could test our previous highs as well.
Okay. What about some of these pockets that have done very well this month? So NBFCs, for example. Of course, we discussed the results, but apart from that, some of the larger names like Bajaj Finance, India Bulls Housing, etc. have done very well this month. Would you put any additional money to work here?
So like I mentioned, in the terms of the financial space, we'll be a little choosy. There are a lot of opportunities beyond the financial space that are part of the reflation trade. For example, metals. I think metals is something, because of the given volatility, people are still not looking at it. But I think one should take cognizance of the smart bounce back in Hindalco or the LME metals. Even, in fact, today, as we speak, the metals are on the higher side globally. So I think the metals trade is still a long way to go. It's seen an intermediate correction, but I think the fundamentals are very, very strong, and we should look at a sustained rally over the next 2 to 3 years.
Okay, finally, Harindra, you said that you expect the recent highs again, all-time highs. What would be the leaders of that rally?
TCS is one index heavyweight that we spoke of. I think Reliance Industries will be an alpha generator market, leading for that matter. It's also lagged some of the other outperforming sectors over the last 6-7 years. And then you will have metals. I think between these 3 or 4 names or spaces that we've spoken, the index could, have enough legs to go up to the new highs.
Okay, well, thanks a lot for that, Harindra. Thanks for joining us on the show. By the way, the SGX Nifty is now below the 100-day moving average, so keep an eye out on that. Vinod Sharma joins in to give us a quick snapshot of how to expect the market move today. Hi, Vinod. Good morning. Given that, markets have been under pressure a tad bit, what's the sense you're getting today?
Yeah, obviously it will open lower, but we need to look at in the past 7 sessions, the markets have quietly gone up, and they've picked up almost 3.5% in the process. Now these are barring the first move that came on 5th of April. All other moves have been very, very small. So we have seen that in the past bear market, which lasted from 8th of Jan to around mid of March 2009, there was not a single session in which you had 7 rises on the trot. Okay. So this is something which is happening quietly. The second thing we need to look at is that what we said on 23rd of March, that the markets would rise from here, and I'll be a buyer at 9950. The markets came that day to 9951.8 and thereafter have risen. I still believe that now we'll have a new support coming in at 10,356 odd. So this is something which is again cast in iron, which is unlikely to break. Okay. So I'll be a buyer around, should the markets fall, in the region of 10,400 with that kind of a stop loss of 10,350.